$100 silver, which I've done. I wrote that in 2003. It's in print. But, we hear $600 silver, $500 silver, $1,000 silver, silver equal to the price of gold. I mean, there's a lot of commentators in the space that will say things that are, in my view, unreasonable. I like to say, look, if we're going to get to 100, and I've said it, we got to get through 50 first. So let's worry about getting through the $50 mark and see what happens at that time, and then maybe make some, further forecasts or projections. I think it's, I know, well, let me restate that. My strong belief that silver was the most emotional investment, more than real estate, more than stocks, more than bonds, more than almost anything else, because the expectation for the little guy, the underdog investment, to go from zero to hero.
David Morgan explains why the dollar has lost value, why investors turn to gold and silver, beginner tips for buying metals, the link between stable coins and U.S. debt, and why silver's market struggles, offering strategies to protect wealth in uncertain times. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
Well, I've been a hard asset guy, and I am a specialist in precious metals, as you outlined, Jack. But really, we do, in the Morgan Report, the paid service, we look at the resource sector. So, like, for example, we were the first to talk about rare earth elements, so most people hadn't heard the nomenclature. Lithium, some of the battery metals, and on it goes. But I've always been a believer in hard assets. I've done stock investing. Started investing in stocks at 16 years of age, which is illegal because you can't contract till 18. But my dad signed what's called the Uniform Gift of Miners Act, which allowed me, because of his blessing, to start trading. So obviously, I've been very interested in this field my whole life. And as far as I'm concerned, I really like the hard asset sector. But real estate to me is the ultimate hard asset. We have to remember that it's always denominated. And if that currency weakens, then the value shifts with it. And I did a look, and we can talk about it later, but I compared gold versus real estate for a 25-year time frame, 20-year time frame, 10-year time frame, and 5-year time frame. And actually, gold outperformed real estate in all those time frames. However, I didn't find out if that was with rents or whatever. I mean, it's a little more complicated than just looking at the CAGR, the compounded annual growth rate. And I think you should have both. I mean, I think I've never been a gold bug, gold only, or that. But the amount of gold that is really required to balance a portfolio is rather astonishing. I recommended 10% in the book, Investing Rules. I did the section on silver investing, and 10% was a recommendation. But CPM Group out of New York recommends a 25%, looking from 1968 till present day. And Mr. Gunlatch just was on CNBC, I believe. I just posted on my Twitter about 10 minutes before we connected for this interview, and he's recommending as high as 25%. Ibbotson and Associates, which has done an independent study years ago, probably about 15 years ago, their take on all markets, inflation, deflation, stagflation, was about 15%. So I'm pretty conservative at 10. But regardless, I think real estate's a good way, especially as you get older. Really, it's all about cash flow. And gold doesn't cash flow, but it's extremely liquid. Real estate does cash flow, but it's not. It's illiquid. Now, it's really the most important one. I mean, one of my flaws is, being well-versed in the topic, I kind of don't start at, the most fundamental case which you're building. And I think that's very important. So first of all, gold and silver are the easiest financial instruments you can buy. And the reason is that you want to do a stock account or a bond account or a real estate even, there's some criteria that you have to meet before you can make the purchase, especially on a home or an apartment or whatever. You're going to qualify for a loan. Gold and silver are the simplest things. You don't have to have any qualifications. You can go into your local coin dealer in your town, and most sizable towns have one or two. Walk in with cash, put the cash down on the counter, and walk out with some gold coins or silver coins or both. So it's really the simplest thing to do. Where do you do it? Well, you could do it over the counter, face-to-face with the coin dealer that's located near where you live. That's one way. The way it's done primarily now with the internet, of course, is an online gold dealer gold and silver dealer, you can find them. They're pretty competitive, and you can actually do it with a wire or a check, or some will take cryptocurrency. There's a lot of ways to negotiate a purchase. And in my book, or excuse me, the book's Investing Rules, the 10 Rules of Silver Investing that I wrote so many years ago, I said to start small. You don't want to make a big mistake. I said, oh my goodness, I've got this much, 10% is this. That's a big number. And I'm going to put it into gold and silver. I'm going to put it in 50% gold, or make one purchase, and all of a sudden you bought the wrong time, or you bought the wrong kind. So I teach people start small. Go in there. I'm going to put, I don't know, make up a number, $5,000. Buy 500 and see how it goes. See how comfortable you are. A lot of people just get the message, realize that inflation is incessant. It's not going away. It destroys currencies over time. And they get a little excited, and they kind of go overboard and do it without discipline. I actually advocate most people to use dollar cost averaging. So, put $100 a month, 1,000, or whatever your capabilities are, following the guidelines I've outlined. I think it's contracting. I think that we're in a situation that could, and I want to emphasize the word could, portend a hyperinflationary blow off. I really, really doubt that will happen. I could also make an argument that it could go the other way, where we have a liquidity event where people just don't have enough cash to buy, the groceries and pay all the bills, which we see throughout America and other parts of the world. So it's a very iffy proposition. The Fed's mandate basically is not really to keep full employment and all that. It's kind of nonsensical. The Fed's job really was to protect all the banking system. So they put the banks above the people. And the second mandate was really to secure a stable monetary system. And if you look at the Federal Reserve's own website, they'll tell you that the $1913 right now is worth about a penny and a half. So they failed in their main mandate, which is to provide a stable monetary system. It's very unstable. People are losing faith in it on an individual basis, corporate level, and an international level. The Chinese are basically buying less U.S. debt and offering some of the debt into gold. That's true of other nation states as well. And the world's drowning in debt that cannot be paid off, and everybody knows it. Well, we're still trying to pretend as if we can either grow our way out of it, which is it's almost impossible, or we could pretend that we got things under control and that we'll get things sorted out sooner or later. But that's mathematically impossible as well. So we're starting to see that the bigger boys are less used to buy, that are used to buy a lot of the government debt, buying less. So you're going to see these mandates come out where, to your IRA, 25% of it has to go in the U.S. bond market. You're going to see things like that where it's mandated. And then the big one that no one really talks about that much is this whole stablecoin thing. And this is where the stablecoin, such as Tether, which is the best and biggest example, is basically buying U.S. debt to provide a stablecoin. And this is kind of a misnomer because, people think they're buying these cryptos to circumvent the U.S. dollar, but the stablecoin is based on the U.S. dollar. So when you really think it through, it's kind of a joke, but this is a good way for the government to have a ready buyer to buy what they want to sell. And really the only new market that's eager to buy it is the crypto.
Do you think the government's reaction to they're moving into the stable coin is a reaction to some of the other countries going into, we already see a couple of countries that have kind of adopted Bitcoin as their currency. And if you're, like you mentioned, some of, the US dollar has been kind of the standard for a long time. And we got to face fact, there's China and maybe another country that would prefer to displace the US dollar as that standard currency. Is this a move for the US government to kind of get in front of it?
It is. My friend Catherine Austin Fitz, and I don't expect any of your viewers to know of her, but I've known her for some time. She runs Solari. You can look it up. But she actually goes as far as to say that, Bitcoin is kind of a situation that is diverting funds that may have gone into other asset classes, particularly the precious metals, into that asset class. And I've made the same argument. Really, the idea is that we need to sell this debt to somebody. And this is a very, very lucrative and easy avenue for the ability to sell more and more debt into a willing buyer. The problem is, as I said, and I think it bears repeating, is really when you analyze it, if you're getting into cryptocurrency, XYZ, or even Bitcoin, what do you cash out in? And the answer is US dollar. I will not discount the move that Bitcoin has made. I mean, from, dollars into the $100,000 range, this is phenomenal as far as percentage gain is concerned. The highest price silver had ever gotten after being taken out of circulation, as outlined early, 1965. We went through the Johnson slug. From that time to 1979, it went from $1.29 the ounce, which is the monetary price, up to about $6. It had basically kept up with the true rate of inflation over that time. $1.29 to $6 is a bigger number, and it kept your purchasing power about the same. But then in 1 year, it went from 6 to 50. It went up almost tenfold. And people saw that and remembered that and had these huge expectations that silver could do it again. And it has, not to that amount, but significantly. And so they get these expectations. But these are things that happen rarely. In fact, I wrote an article in Futures Magazine, which is a bit of a feather in my cap. They don't let just anyone write for that. And my article is called Spiked. And I wrote about spiked as silver spikes higher and it spikes lower. And those are things to take advantage of. It spikes high, sell, spikes low, buy. That's the basis of the article. So I think unreasonable expectations is probably the main thing. And the other one that I wrote about on my Twitter feed was the manipulation argument, which is much more than we want to go into, Jack, at this time. But yes, almost all markets are quote unquote manipulated at some level. But my belief has been proven out by the market itself, is that in the long term, no market can be. Oil's going to go higher. It's going to go higher. It might be shot down a few times for different reasons, political or otherwise. But in the long run, markets are going to basically go with it. Yeah, it has. I mean, real estate runs on leverage most of the time because people borrow and get a mortgage. Gold and silver run on trust. And when the debt cost goes up, one asset gets squeezed and the other one shines. So if you start seeing squeeze on interest rates because of mistrust of the dollar, that means it costs more to service the debt, especially if you have a variable interest loan, which not many people do, but they're out there. But if you wanted to, sell off an apartment complex and reinvest, and you sold something that you got a 3% loan on, and now you've got to go into the next building with 7.5% loan, that you're going to pencil that out. Whereas usually in those environments of uncertainty and mistrust of government, mistrust of the financial system, that's when the gold and silver markets really take off. Early on, and brought the message to a lot of people, including the producer, owner of the business. So the business took off, and I went from zero to hero in about 10 years. I mean, stubbed my toe along the way. And what I noticed was when the metal started going higher and higher, I basically had to do no advertising. People, I was well known enough by that time frame that I would start getting, new membership. But this time it's different. The metals have done quite well, especially gold. Well, gold and silver are about tied for year to date. Last year, gold outperformed silver rather substantially, but they're both on the move upward, and the business is falling off. My business is down rather significantly from where it was about 10 years ago. And it's competition. And I think it's also that a lot of people in the middle class that used to be able to save, modestly, whatever that is, depending on your income, a couple $100 a month, $1,000 a month, whatever it is, got that eaten up by this incessant inflation, where now the number they're making on an annual basis might be a bigger number, but it's buying less because insurance costs have gone up, food costs have gone up, transportation, insurance, medical insurance, all that stuff. And so I think a lot of people are just kind of throwing it in the towel. And then there's what's called stale longs. These are people that bought silver when it hit 30, watched it go all the way down to 18 or whatever it did. Now it's back into the 40s, and they're like, okay, I'm done. I've just held on for so long, has not performed to my expectations. I've got a profit. I'm going to take it.